Now, just looking at the broader economy, after we had the fourth quarter GDP number, which came in much lower than what everyone was expecting, you've got everyone, pretty much everyone, revising their growth forecasts for the current financial year down to levels of even 5.8, 6%, 6.1%. Would you say that the situation is as bearish as people are making out to be, or do you believe there still is somewhere there's a lot of hope for us?
Yeah, I don't think, we've reached a level where we are kind of likely to dip below 6%, like what some of the forecasts are. I think, in that sense, Q4 was a number which was very low. But after that, you're already seeing the mining sector gaining, some amount of traction. I think if we see normal monsoons, which we are likely to see, we will see the agri production coming in. Consumption still continues to stay, while in some sectors it's a little bit weak, but I think it still continues to stay. So I think our sentiment currently is much worse than, what the actual numbers would probably turn out to be.
Right, but there was all this speculation about Greece likely being forced out of the eurozone. That's not happening now. At least it's looking like it's not happening. To that extent, would you say that the outlook for India just gets that much better, or do you still believe there are still a lot of known unknowns in Europe that are waiting to emerge?
I think the European situation and the challenges there are much larger than just Greece. Well, first of all, it's a positive sign that now today, Greece is saying they want to remain part of the eurozone. But we still haven't gone through the challenges of Spain and Italy and so on. So I won't say that just today's decision for Greece to remain in euro is actually solving a lot of the eurozone problems. But I think we will have to take this as a matter of fact that for some time to come, the situation around Europe is going to remain uncertain, and we have to plan our economy and our growth in that uncertain environment and make out our action plan accordingly.
Sure. Now, you just spoke about sentiment a short while back, where you said that sentiment has been the biggest casualty of what we've seen play out over the last many months. Now, would you agree that there needs a lot to be done by the central government, and if there were maybe 3 issues that you could identify for them to, get at with urgency, what would they be?
Well, I think what we really have to do is to, get the executive decision making back into action. I think there are a lot of projects today which are reaching the final, milestones of completion, awaiting maybe the last few approvals, or there is a lot of capacity which is ready, up and running, and awaiting, a raw material linkage. I think we have to make sure that we put this capacity to productive use. I mean, let's just look at the power sector. At one time, when we used to get a lot of proposals to sanction power sector, I used to sit and wonder whether we as a country have the capability to implement that much of capacity. Today, we have reached a situation where in a year, we've already implemented about 20,000 megawatts. So, that is something that we should actually be celebrating, that as a country, we have the implementation capability of reaching the 1 lakh megawatts in a 5-year plan as what we want. But having reached close to, completion, there are many projects that are not really working at their full capacity or not started working because the raw material is not there or the final environmental clearances are not there. So in my view, if we can pick the top 20 projects that have just completed or neared completion or nearing completion, and just make sure that the last mile approvals are given so that this capacity is up and running, I think that is the biggest positive trigger that we can, ensure for the economy.
But what do you believe has gone wrong with the India growth story? And again, within that, we keep talking about India being a consumption economy, that's our strength. Do you believe that part is a little overblown?
No, I think that part is still strong actually, because our consumption strength really comes from our demographics. So in that sense, it's still a known fact that we will continue to add, about 11 million people to the working age group every year. And these are the people who will additionally start earning and therefore aspiring and therefore consuming and so on. So I think the entire push from the consumption side is still very strong. But yes, we have to remember that if for a long period, if we do not create a commensurate capacity to meet the consumption demand, then just that demand will only lead to inflation. So I think I really believe that the consumption story is still very strong, but in order for us to really get that full potential, we have to make sure we also create capacity simultaneously.
Right. Now, when you talk about creating capacity to meet that consumption demand, do you worry that, while we are going through a low growth phase at the current juncture, when things improve and when India gets back on track, the fact that investment has pretty much come to a standstill and that capacities haven't been created is then going to be our biggest challenge, because when the consumption comes back and when the growth comes back, the lack of capacity is going to drive inflation to levels that we've not seen.
Well, I think in a way we have seen this over the last few years, where the increase in consumption has actually overtaken increase in supply. So, and not only just products or goods and services, but including infrastructure, where we are actually playing a catch-up game. So I don't think this is something that we'll realize one fine day. I think it is a phenomena that we are going through. But, the point that I'm making is it's not as if we have not created capacity. The good news is that there is some amount of capacity that we have created. As I said, we should celebrate that we've created maybe 20,000 megawatts in the past few months. But is it operating? There are many plants that are operating at 65% PLF. Now, what does that do? That increases the cost of power, that actually, companies face power cuts, the other production goes down. So then we just complicate and, build the problems one on top of the other. So in my view, it's really debottlenecking the economy by either creating capacity or by making the existing capacity fully up and running.
Now, recently we had the government, in fact, a committee chaired by the Prime Minister, coming out forcefully saying that, they've got the intent in terms of getting the infrastructure sector up and running is there, that we need to get moving. Has industry bought that? Because the big challenge is traction on that front, and is industry convinced that we will see traction over there?
Well, my interactions, with the Prime Minister's office also actually indicate this very positive, stand to say that they understand the issues. They are quite determined to kind of, take and make, these projects get up and running and see that infrastructure sector moves. So I would say that at least I'm hopeful. But, finally, I think industry will buy it or not will finally depend on actually seeing the action on the ground. I think today, as I said, the sentiment is so low that no one really wants to believe, intent. Everybody wants to see action. So I think the mood will change only with action.
So when you say, getting sentiment back, maybe would you believe that, just making two big bang announcements that, we are going to do that, and even if they didn't implement on that, that by itself could, have a very strong bearing on sentiment?
No, I actually do not really believe in big bang announcements. I mean, as being the most important requirement. I think, very big reforms which require political debates can take their own time. In my view, the 20 projects will not be big bang announcements because they are already there. You have to see, some projects may need one last approval, some may need 3 approvals. So these may be just 50 small, regular, mundane approvals. But give those approvals, you will see, you will feel the activity on the ground, and that is what will trigger the positive mode.
Right. Now, a lot has been said and written about the current account deficit, the fear that it will go all the way to the 4% level in the current financial year. Also the fact that 2 big factors are going to influence capital flows into the country, the fact that the global environment needs to improve and the local investment sentiment needs to improve. To your mind, which is the more important of the 2?
No, I think both are important, but what is in our hands really is the local environment, and that's what we should work upon. Because all said and done, I think if we can show and create that kind of confidence that action is taking place in India, people do know the long-term positive growth story of India. But I think everybody in the current situation wants to see action and movement towards that story. So I think that is clearly something that is in our hands, and we should make it happen. The global situation is really not in our hands, and that will continue to remain volatile for quite some time.
So we spoke quite a bit just now about supply side bottlenecks feeding into inflation and inflationary pressures holding up. Do you believe it's fair for monetary policy to be tasked with the challenge of addressing inflation when supply bottlenecks exist on the other side?
Well, I'm not, that pure an economist, so I would not really want to comment on this, but I would say that everything has to move in tandem. I think, the fiscal plan for the country, the monetary plan for the country, everything has to move in tandem, and that's how the total solutions for the country emerge.
Now, there was a lot of expectation that the RBI would lower either the repo rate or the CRR today. We saw them do nothing. The RBI again speaking about the fact that inflationary pressures need to come under control before they can do anything. Would you say that banks have been a little disappointed?
Frankly, I'm not surprised because, if you looked at the inflation numbers, they continue to remain high. And, the governor had said in the last policy announcement itself that he had in a way, upfronted some amount of the rate reduction for the year. So, frankly, I think in this current position, I was personally not expecting really a reduction in the repo rates. But, in my view, it's really the overall cost of funds for the banks and how that moves, and therefore how does the lending rate move. I think those are the more important things, as we go forward.
Sure, but to that extent, between the two, if you had a choice, would you have said that, a CRR cut would have been more desirable because the pass-through for you to your end customer would have been much faster?
Yeah, I think between the two, definitely CRR actually really infuses liquidity into the system and has, in fact, a more direct impact on the cost of funds. So really that would have been more desirable.
And again, would you rework your expectations in terms of how much, the quantum of rate cuts we can expect in the current financial year based on the RBI's language in today's statement that, inflation continues to be a very, very big concern for them?
But, I think we all believe that, just that announcement of repo rate cut would change the lending rates substantially. And that's what I'm trying to say is that the lending rates really depend on the cost of funds, which depend not just on the repo rate announcement, but also on the overall liquidity and the deposit growth rate and the cost of deposits and so on. But otherwise, in any case, I think at the beginning of the year, I thought that probably 75 basis points is the kind of reduction that will happen in the year, and 50 basis points was upfronted in any case.